Okay, guys, this is the BTC 4-hour chart, and I shared a update in the group as well that I am looking that BTC will touch here, come here in the next few days, and as it did, it was actually here at that time at this candle, so it came down and then went up and went up heavily. This was shared in the BTC update as well. So I usually avoid weekend trading, as many of you already know that, because of the low volume and how things process slowly. So it's like draining your energy anyway. This was the update which was shared on 22nd, on Friday, I guess. So you can see Bitcoin was here at that time, and I shared the update that I'm expecting this move. And you can see it actually went first up and then came down and then just exploded because of the low volume. And this is why I usually avoid weekend trading, that this is what happens when there's low volume. One whale can manipulate the market as well. But it depends on your mindset. Would you say this manipulation, or would you say an anticipated move? Because there was an expectation from myself that BTC will go up, whether it will go up directly or come down and then go up. So we expect these kinds of move, and on weekend, because of the low volume, these moves happen very quickly. So just be careful. If we go back to the monthly chart, let me just go to index. Okay.
Ooh,
So this is the index chart, and let me just hide some. I can hide quickly.
yeah. As we discussed in the last Zoom session, that we stayed inside that the range set by last month, and the range is just getting tighter and tighter.
Exactly. So we discussed this in the previous Zoom session as well, where we talked about how we are looking at the markets, and you can see, if we go back in monthly, no way I'm getting bullish until we cross this. So that will be 23,300. For if BTC closes above this region in monthly, then it will be a bullish sign, for a reversal sign. And again, I won't be like going crazy that we are going to 32K or 40K. I never recommend these ranges. This is just this is just guesswork. Okay, trading is probability. We we trade a move which is more probable. So if you are doing spot trading and if you are not looking at charts, then you should just buy and forget about it. And if you are trading daily, if you are doing intraday trades, then going crazy about the 25K, 28K, 32K, that's just insane. We can't expect a move. It will happen, but when? So that is just crazy. I would prefer a move, 2% move daily, instead of waiting for a 20% move for like 3 months or 4 months. So that is just insane. If you are doing day trading, then just look for scalps, look for small swings. Intraday trades give you good return, so it doesn't matter anyway. If I can, yeah. So monthly, we are bearish. We had looked like if this month will close green or red. If you remember the three red month pattern, so this, if this month's close red, I will be bullish for the next month. But still there are 8 days, so it can still close green. If we go into weekly, last few weeks, you can see how the volume was very low, and the maximum range we are in is again between 17 18K to 20K. We have like last 3 weeks we are in this range of 21K, 20,500 to 18,000 or 17,500 range.
Yeah.
We are still trading in that. So
I
that,
see personally, I don't see us. I think this can go on for another like 10, 11 weeks, where we just really just tighten things up, and we just kind of really stay in this micro range.
this is what I'm expecting as well. There can be some moves. Again, it can go to 25K, 22K, whatever it happens. We'll trade that accordingly. But going out of the range, going say I am targeting 25K, 28K right now. that's not the way I trade. That's not the way I recommend trading. It's just insane if you're going for that trade. What people say that it is 75% down already. What will happen if it goes 5% down from here? Let's see. Let's think about that. Okay, we are at this region. So if it goes to,
we have seen some demand in the low 18s.
yeah,
I think on a positive note, that number is holding. When we had our major crash down into the high 17s there, and I mean at this point in time, whenever we do cross that kind of 18.5 kind of zone, and then we go below that, like we sort of enter into a pretty quick demand zone, and the price does come back up.
yes, exactly. That's there is a you can say a quick reaction to that price, and price goes back, well, like it goes back to 18,800 and go come actually we are just tired of
Up,
seeing
up, down, up,
19,000.
down, up.
So we are actually tired of seeing BTC at
Oh
19,100 to
man.
300. So yeah, we are in that range, and whenever it goes below 18,800, 18,500, it comes back quickly up. This is happening. This is a positive side. But what if, like people are saying, what will happen if it goes to 16,000, 15,000? Actually, it doesn't matter in much in terms of percentage. It is 15% move to 16,000 still. But what if it stays there for another 2 months? What will
Six
you do?
months.
What will you do then? That's the
Oh,
problem I have. I'm okay. It will go to 22K, it will go to 25K, but what if it takes 3 months? Will you hold that position for that long? That's just, if you're in spot, good luck with that. I hope that happens quickly. But again, as I keep preaching that, trade the range, trade the range. Doesn't matter BTC is at 20K, doesn't matter it is at 16K. If you're trading the ranges, it doesn't matter. If you're buying in spot, again, it won't matter until it goes above 32K. So yeah, Don is saying maybe 1 year, brother. So yeah, 1 year is a lot of time. So exactly, you should think how are you going to trade from here. And if you're buying in spot, I always recommend Bitcoin. Sometimes I'm now bearish at Ethereum. I, again, I'm getting a little bearish on Ethereum. So I do recommend people buying Bitcoin and Ethereum because they are low risk coins. But with the transition to proof of stake, I have some concerns about that as well. So, but still, if Bitcoin goes 5,000 up, it like in the recent weeks, we have seen Ethereum did double of its bottom. Bitcoin didn't do that.
what's the so what Ripple, and was it Algo, like filed some lawsuit against proof of work or something like that? I didn't get deep
No,
into the article, but there's something happening there. And
okay, there is, you can hear me fine, Nate, right?
yes, yes, sir.
There's a guy's asking, he can't hear anything. Connect the audio, bro. Your audio. Let me just tell him that. I didn't know if there is a lawsuit, if there's someone's proof of work. So they are trying to ban Bitcoin.
Yeah, Ripple, and I think it might be Algo, or another one of the layer ones, sort of banded together, and trying to push proof of stake over proof of work.
Okay, I didn't look at that news.
Yeah, that when Ripple started really moving up, that was like that was like the announcement of their sort of legal action in the situation.
I didn't look into that news right now. I will try that. Again, I'm not good with the fundamentals and FA, but I I think they can't ban Bitcoin actually. That would be absurd. There is, I think there is in the that is in the white paper of Bitcoin that every other cryptocurrency must have to be traded against Bitcoin, something like that.
Right.
So it's like dollar of the cryptocurrency. So yeah, we'll talk about DXY as well. So weekly ranges again, what I'm seeing is that we have this last time Bitcoin came down from 21,800. That is your lower high, and this is your lower low right now. So that will be your current resistance in weekly.
Each.
Sorry.
Wow, we are gonna get. Hola, ¿cómo está?
Okay, I think that was someone else who was talking. It's all right. So right now, weekly lower high is around 21,800. So if Bitcoin go above this, there might be a chance of going targeting for 24,000, 25,000. And if Bitcoin closes weekly above this 24,400 region, we can go up for the next level of 28K. I'll trade the range no matter what. Again, daily, not much is happening. We have last month highs yet to be broken, which is 21,800. So if Bitcoin closes above this region of 20,500, then we might look for that region. So no worries in that. Again, this weekly closing can be bullish if it closes above this 19,500. Right, let's see, what do we have? So we have this big green candle for this 4 hourly, which is about to close. Right now, the resistance level was 19,500 region to 650, 670 region. It is around that. So let's see how the direction goes for the next candle. But it is weekly closing, and we always expect volatility in this time. So no worries about that. Do not stay stuck. I'll say our friend Dan is stuck in a trade, but no worries. I think it will go down. There will be a push down. So hopefully you will come out of this position soon, brother. This was a low.
No, you got that. You've got that purple supply zone marked above there, and I mean, just given that we're, this is truly a bear market, and if you're looking for a trading strategy, I mean, building a short position in that supply zone, I mean, is probably a good move.
Yeah, we actually shorted that region a few times as well. Right now,
Yeah.
I'll be careful shorting there until I see a trend reversal, because
Right.
it has been tapped a lot. I mean,
Right.
we got one tap, two tap. There is another. I think it will broke soon. So if it goes there, I will look for short when there is a trend reversal. I will go short then.
Right.
Yeah, don't just start catching knives, so that sometimes get crazy. So we always preach risk management, and risk management comes with two things. The main thing is stop loss. Always have a stop loss. Always have an invalidation point for this trade. Like for, if I talk about my friend Dan, I'll say his stop loss should be above 19,700, around that region. And if there is a Bitcoin closing, like if there is a 4 hourly closing above 600 region, he should think about closing his trade. But you see, the thing with the volatility, it might go up and then come down. So if there is a 4 hour candle closes above 19,600 region, then I'll say he should get worried about his position. All right, so this is for Dan. I just gave you the stop loss for your trade. I hope you can manage that trade and come out in profit soon. So we were talking about risk management, and in risk management, there are two most important things. One is stop loss. Always have an invalidation point. When you are entering a trade, there should be a TP, there should be a stop loss, and take a trade. What will happen? You lose the trade, stop loss it, you get out. You win the trade, TP hits, you get out, you made profits. Trading is a game of probability. You wait for a high probable move, you take that move and you try to win that. If you don't, there is nothing wrong. Stop loss hits, whatever happens, you get out of the trade, you go for another trade, you trade that. Now, if I have to open up, okay. The second most important thing is your position size. How can we calculate a position size? This is what we are going to discuss. Let me just, okay. Let's say you have $1,000 account, and let's talk about trade right now. Let's say we are shorting Bitcoin here, and this is just, I'm not telling you to short here. This is just for the sake of discussion, for the sake of argument. Let's say we are shorting Bitcoin here and our stop loss is around 19,700, 720. Let's say that. This is, let me just make it clear here. 720 is your stop loss, and your take profit is this low, which I say this region first. So which is 19,000. Okay, so TP1 is 19,250, TP2 is 19,150, TP3 is 19,000. So let's talk about that. We have these TPs, 3 TPs, let's say. I'm gonna go with the, let me just mark those TPs as well. This is your TP1, TP2, and then there's 19,000 region. All right, so these are your TP. Oh, look at that. I didn't calculate it, but the risk to reward ratio is 2, which is the minimum risk to reward you should take for any trade. Okay, so this is your entry is 19,475. So first, this spreadsheet is available in our Discord. You can use this. You can use that website. There is a website as well. I can open that as well, but let's talk about this. Let's say you have a $1,000 account and your entry is 19,475. Your stop loss is 19,720. Your leverage is 125. Oh my God, no, that is a crazy leverage. Let's go to 25. We'll talk about how leverage doesn't matter. So I'm just giving you some theater of that. All right. So 2% risk, that's a potential risk of $20 if your stop loss hits. You will lose that amount if your SL hits. It's not like you take a margin of $20. No, you will take a margin of $63 with 25 leverage. So 63 times 25, that gives you 1,589, let's say $90. So this will be your total position size with leverage. This, how did we got this? 63.59 times 25, that will give you this position size. This is your total position size with leverage. This is your margin, the margin which you're using for this trade. And if the Bitcoin goes to 19,720, you will lose $20 of this margin. That will be your SL hit, and you will lose 2% of your total portfolio of $1,000. Okay, your TP, oh, I have 19,118. So let's put 19,000. So if 19,000 hits, you will make 38.78. So there is some like difference in calculation. I think that's why you are getting a $38, but you can see how you are getting a double of your potential loss. So you will get, this is 2 RR. That means you will lose 20, you will make $40. That is what 2 RR means, 2 risk to reward ratio. You are risking $20 and you are getting a reward of $40, which is double of your RR. Let's say you risk 1% of your account. You will lose $10, you will make $20. So this is what you get. What if I change the leverage to 125? I will lose big money? No, I'm still losing that $10. What happened? What went wrong? Only margin has changed. Your position size remains same. If I go back to 2%, you can see the position size remains same. Your margin has decreased to 12. Instead of 63, you're only using a $12 margin, and you will still lose $20 if you use that stop loss. And if you're using this portfolio, and you will still, let's say you have a portfolio of $500. Again, you're risking 2%. You will lose $10 and you will make $20. Now your potential loss has decreased because of your portfolio size. If you are using $5,000, your potential loss increases to $100 because that is 2% of your original portfolio. So this is how you calculate your risk, your position size, and that gives you the margin. And this is the amount you're losing. That should be in terms of, it should never be higher than 3%. No matter what, you are so amazing trader, or you are getting signal from so much amazing team. What will happen, that what I have observed in my this period is that if I give 3 good trades, uh, what will happen is that someone, let's say I'm gonna go with my friend Fahim. So let's say Fahim sees I gave last 2 trades, they went fully, like full on TPs, and it was amazing trade. So his confidence has built on me that he's a good trader, he's giving good traders. I give another trade, and somehow now what will he do? He will go all in that position for the 3rd trade, because he thinks I'm a very good trader. I have 100% win rate. And what will happen? SL will hit, and he will lose huge amount of money because he had a stupid trust on me. I'll say stupid trust. I'm going honest with you guys. Even I should trust 100% on myself, right? I should trust 100% myself, right? Even though if I trust myself 100%, I will never risk more than 3% on any of my trade. I'm sorry about that. I'm just using your name for example. I'm not targeting you, brother. I'm just using your name for reference. So I will never bet more than 3% on myself as well. No matter how crazy good I get, there is a chance. Again, I said that at the start that trading is a game of probabilities. You win some, you lose some. Even though if your win rate is 80%, sometimes if you go crazy with your portfolio, if you go crazy with your position size, your loss after the 71st trade can be that big, and you lose all the profits. It has happened to me as well. It has happened to you guys as well. You must have experienced this as well. So this is what you do. You keep your portfolio risk, you keep your potential risk to maximum 3% or even less. What will happen is that you will have consistent profits, consistent loss, and over the time, your profits will be increasing, your portfolio size will be increasing. And I have given that example as that your profit will increase like this slowly, but it will go crazy with the time as your portfolio size will increase. If you are thinking trading is get rich quick scheme, I'm sorry, my friend, it's not. It's a get poor quick. That I can say that, but it's not get rich quickly. So if you're not using it right,
we're all broke. We just post memes when the market's good, and the market's bad. Yeah, pump it.
So yeah, so you know how things can go crazy. We have seen this over the time, and I think you all have seen this as well. So please follow risk management, please follow position size. There is no other way to make in this market. I'm again saying this with my experience. I have been liquidated more than once. I have no shame in telling that. I have learned from my mistake. You can learn from my mistakes as well. So again, it's just crazy if you think you're going to double your portfolio in 2 days, 3 days. It can happen, but you will lose that amount even more quickly.
Just as fast, yeah.
Just as fast. So this is what the position size. I think everyone understand what is position size. If someone have any questions, I would like them to ask in the chat, please. Fahim, do you understand position size? I hope he understand position size now. So anyone, if there is any question, please, you can send a message, you can unmute yourself. I would like to entertain any question right now on position size.
And I think to simplify, what Zish, the message that Zish is trying to get across, I think the main point that I typically stick with is just never lose more than 1% of your entire portfolio on a trade. Like
Exactly.
that's just big fat rule. Just if you can stick to that rule, you will survive. And by surviving as a trader, you continually learn, and the only way that you become a better trader is by continuing to learn. The only way that you can learn is by having some money to be able to trade with. You know, you can watch all the YouTube videos you want, you can study all the materials you like, but until you manage your risk and manage your emotions when you're in a trade, you know, that's probably a really critical aspect of being a good trader. So you have to survive to thrive, you know, as I said earlier in the Zoom call. So you know, that's super important for me, and should be for all of you, is risk management is loss management. You know, and so you stick to that 1% rule, and you'll trade tomorrow, and you'll learn tomorrow, and you'll trade the next day, and you'll learn the next day. You know, that's the only way you become a better trader, is experience and growth, personal growth.
Okay, guys, Don has announced there is a gift for everyone who is on the Zoom. So that's even better. So you guys will be rewarded even more. There is no better reward than knowledge. Please take that as well. And again, there is potential gift from Don as well. So double whammy or double treat. All right. So again, now we talk about the emotions which comes with any trade. Whenever you enter a trade, it goes in red, you start getting sweats. Why is that? Because you are not managing your risk.
Your
Because
position size is too big.
exactly. Why do you get sweat? If I have a $500 portfolio and I'm risking 1%, that is a potential loss of $5. Fuck that. I mean, sorry guys, sorry, but I mean, why would I care about $5 if SL hits? I'm out of the trade.
Yeah.
I will be out
Yeah.
of a wrong trade so quickly, and I will lose very small money. If you go crazy and you are risking, let's say 10% of your portfolio here, that is $50 of your $500 account. And
Ooh, of course.
definitely you should get sweat. Definitely you should be sweating if it's going red. I mean, that you see the greed and the fear comes with this. If you are managing your risk, if you have a stop loss, if you have a right position size, there won't be sweats on your forehead ever. I'm sure about that. I have experienced this. I have a trade, I have an invalidation point, I have a TP. What will happen if SL hits? Nothing. Just I will lose 1%. I will take another trade. I might make 2% of that trade. So I will cover that quickly, so easily. So no, it's not a big thing for me if I am managing my risk. If someone says, we had that kind of discussion in our group, that what if I have $100 of account? What if I am risking 1%? That is not a big trade. I won't be making that much gain. You won't be losing even if you go crazy with your portfolio size. You go, let's say I am going to take 10% trade, you will lose $10. That is $90 you will be left with. And I'm telling you for sure that you will lose more money by risking more, and you will make money, but you will not be consistent in profits, and you will lose more money over the time. And you will say that crypto is a scam, trading is a scam, it's just buying and selling. So these greed and these fear emotions comes with that. All right, guys, if you have any questions with the position size, please do let me know. If you have someone look at Clay. Okay, for him, let's have a look at Clay quickly. There was a, oh my god, what just happened? Oh my god.
Oh, what are we looking at? Play.
Oh my god. Yeah, if you should have told me earlier. I would have shorted this here. Oh.
Damn.
Oh.
That's what you call a low liquidity market move.
Oh my god, this is like 30. Okay, let's talk about this here. 41% move in 2 minutes. That's why I never recommend a trade without SL. That's why you should have a stop loss. And if your SL hits, get out of the trade. Do not think it will come down, I'll close at break even. Respect your SL, respect your trade, just take the loss, move on. You will have another opportunity to make money. Okay, this comes with another thing. It has huge negative funding on Binance. Let's go to Binance quickly. And we are going to discuss funding rate next. So I'm going to stop recording for like just a minute.